Strains between the United States and Japan, two allies, have deepened due to two major events undermining their relationship. The first is Japan's gradual reduction of its U.S. Treasury holdings to diversify investments and reduce reliance on U.S. debt, potentially raising U.S. borrowing costs and disrupting financial markets. The second issue is the U.S. administration's decision to block a Japanese company from acquiring U.S. steel, citing national security. This move by Japan, seen as politically driven and protectionist, has damaged economic ties and led Japan to sue the U.S. The decision has raised concerns about shifting from cooperative trade relations to a more protectionist stance. These events expose tensions in the U.S.-Japan alliance, raising uncertainty about their future partnership and signaling a shift in global economic diplomacy as Japan seeks to safeguard its interests amid unpredictable U.S. policies over the past decade. Not only Japan, but also China, have significantly reduced their holdings of U.S. Treasury securities, reflecting shifts in their foreign exchange reserve management and broader economic strategies. In 2013, China held approximately $127 trillion in U.S. Treasury securities. By November 2024, this figure had decreased to $768 billion. Japan's holdings have declined over the same period. In 2013, Japan held around $1.2 trillion in U.S. Treasuries. By November 2024, this had decreased to $86 trillion, representing a reduction of approximately $11.2 billion, or about 8.4%. Japan and China have been leaning towards cooperation rather than hostility over the past few months. During a meeting in Beijing, Japanese Foreign Minister Tetsuya Iwa and Chinese Foreign Minister Wang Yi agreed to initiate talks on security matters. They plan for Wang Yi to visit Japan in 2025 for a high-level economic dialogue focusing on environmental, energy conservation, and healthcare cooperation. Both sides emphasize the importance of maintaining open communication to manage regional security concerns, including territorial disputes and military activities in the East China Sea. In a move to enhance people-to-people exchanges, Japan announced the relaxation of visa requirements for Chinese visitors. This includes extending the duration of stay for group tours and increasing the validity of multiple entry tourist visas. This decision reciprocates China's earlier expansion of visa-free access for Japanese citizens. The two countries addressed the contentious issue of Japan's discharge of treated radioactive water from the Fukushima Daiichi nuclear power plant in September 2024. They agreed to implement long-term international monitoring under the framework of the International Atomic Energy Agency, IAEA, allowing stakeholders, including China, to conduct independent sampling. China indicated that it would consider adjusting its ban on Japanese seafood imports based on scientific evidence obtained through this monitoring. But let's first look at the growing tension between Japan and the US. Japan's investment in US Treasury securities has consistently declined in recent years, signaling a broader strategic realignment in its financial and economic priorities. Once the largest foreign holder of US debt, Japan's investments in treasuries have steadily fallen due to a mix of domestic economic factors and global financial conditions. In February 2020, Japan's holdings reached a peak of about $1.29 trillion, the highest in recent times, underscoring its pivotal role as the top foreign investor in US debt. However, by 2021, these holdings began to level off at around $1.25 trillion as global economic conditions changed, especially with the emergence of the COVID-19 pandemic and its effects on financial markets. The downward trend became more noticeable in 2022, when Japan's Treasury holdings decreased to $1.28 trillion by April, the lowest since early 2020. This decline occurred alongside the Bank of Japan's efforts to address domestic economic issues, such as deflationary pressures and the need to stabilize the yen against a strengthening US dollar. Increasing yields on Japan's domestic government bonds, JGBs, also made them more appealing, drawing investments away from US Treasuries. By 2023, the decline continued, with holdings falling to approximately $138 trillion by year-end. This sustained decrease was driven by Japan's emphasis on diversifying its investment portfolio and reducing risks linked to heavy reliance on US debt. Additionally, higher hedging costs resulting from the Federal Reserve's aggressive interest rate hikes diminished the net returns on US Treasuries for Japan. Japanese investors further discouraged investments in American securities. By November 2024, this had decreased to $1.0986 trillion, representing a reduction of approximately $11.2 billion, or about 8.4%, compared to 2013. This recent decline reflects Japan's strategic measures to support its weakening currency, the yen. Amidst ongoing appreciation against the US dollar, Japan conducted its largest single-day yen buying intervention in April 2024, selling substantial amounts of US Treasuries to finance the intervention. Additionally, rising yields on Japanese government bonds and Japan's broader initiative to realign its international financial strategy have accelerated this trend. This consistent decline highlights Japan's flexible financial strategy driven by the necessity to balance domestic economic stability with external market forces. The shift also raises concerns about the impact on the US economy, as Japan's sell-off could potentially lower demand for US debt, leading to increased borrowing costs as Japan continues to diversify its investments and seek closer economic ties with neighboring countries, including China. This evolving strategy indicates a realignment of its role within the global financial system. A major factor driving this shift is Japan's move away from its long-standing ultra-loose monetary policy. The Bank of Japan, BOJ, has indicated greater flexibility in yield curve control and has begun raising interest rates. This policy shift makes Japanese government bonds, JGBs, more attractive to domestic investors. For years, low yields on JGBs encouraged Japanese investors, including major entities like pension funds and insurance companies, to seek higher returns abroad, particularly in US Treasuries. However, as JGBs now offer improved returns, there is a natural shift of assets back to the domestic market. Another key factor influencing Japan's decision is currency market volatility. The Japanese yen significantly weakened against the US dollar throughout 2023 and early 2024. To stabilize the yen, Japan intervened in foreign exchange markets by selling US Treasuries to acquire dollars for intervention purposes. These interventions highlight Japan's commitment to maintaining currency stability and its broader economic resilience amid global financial pressures. Portfolio diversification is also a priority for Japanese institutional investors, who are increasingly looking to diversify to mitigate risks. Heavy reliance on US debt exposes investors to geopolitical uncertainties, interest rate changes, and potential shifts in US fiscal policy. Consequently, Japan has been exploring investments in European and Asian markets, as well as alternative asset classes such as infrastructure and technology projects. This diversification effort aligns with Japan's broader strategy of reducing dependence on a single economic partner Japan's diminished interest in US Treasuries could have significant consequences for the US economy. As a major holder of US debt, any sell-off could decrease demand, pushing up US borrowing costs. This is especially concerning given the US government's increasing fiscal deficits. Additionally, large-scale Treasury sell-offs could heighten market volatility, affecting global financial stability. The reduction also highlights the vulnerability of global reliance on US debt. As Japan adjusts its economic strategy, other countries may follow suit, gradually eroding the status of US Treasuries. As a global safe haven asset, Japan's actions extend beyond economic factors. They are part of a larger strategic realignment of its international relationships. Reducing US Treasury holdings reflects a desire to achieve greater financial independence and decrease dependence on US monetary policy. This realignment coincides with Japan's efforts to strengthen ties with other key partners, including the European Union, ASEAN nations, and even China. Simultaneously, Japan is enhancing diplomatic relations with China. In December 2024, Japanese Foreign Minister Takeshi Iwao visited Beijing, and along with Chinese Foreign Minister Wang Yi, participated in the second meeting of a high-level consultation mechanism on people-to-people and cultural exchanges. This meeting resulted in 10 significant agreements aimed at boosting bilateral cultural and social interactions. Additionally, in November 2024, Japanese Prime Minister Shigeru Ishiba met with Chinese President Xi Jinping during the APEC summit in Lima, Peru. Both leaders expressed a desire to build a constructive and stable relationship, discussing various issues, including trade and regional security. The button helps us reach a broader audience, and sharing your thoughts or feedback in the comments makes an even bigger impact. Thank you for watching. Now let's dive back into Nippon Steel's attempted acquisition of US Steel, blocked in December 2023. Nippon Steel, Japan's leading steel manufacturer, announced plans to acquire US Steel for approximately $14.9 billion, aiming to create one of the world's largest steel producers. This acquisition was set to position Nippon Steel as the second-largest steel company globally, enhancing its production capabilities and expanding its market presence. The deal promised to preserve the US Steel brand, maintain its Pittsburgh headquarters, and uphold existing contracts with the United Steelworkers (USW) union. However, in January 2025, President Joe Biden intervened to block the acquisition, citing national security concerns. The administration emphasized the need to retain domestic control over essential sectors like steel production, which are vital for national defense and infrastructure. This decision followed an assessment by the Committee on Foreign Investment in the United States, CFIUS, which evaluates the security implications of foreign investments. In response, both Nippon Steel and US Steel filed lawsuits against the Biden administration, arguing that the decision was politically motivated and lacked a proper legal basis. The companies claimed that the blockage violated constitutional due process rights and statutory procedural requirements. They also accused local competitors and labor unions of engaging in anti-competitive actions to prevent the takeover. The Japanese government expressed difficulty in understanding the ruling, viewing it as a potential source of tension in economic relations between the two nations. Japan's industry minister described the decision as incomprehensible, raising concerns about future investments and the broader implications for US-Japan economic partnerships. These events highlight the complex nature of US-Japan economic interactions. Japan's reduction in US Treasury holdings reflects broader market and policy trends, while the blocked acquisition underscores the US government's focus on national security in foreign investment matters. Both scenarios warrant close monitoring due to their significant effects on the economic and diplomatic relations between these long-standing allies. Evolution of Japan-US relations over time. The US and Japan share a multifaceted relationship shaped by forced contact, cultural exchange, conflict, economic rivalry, and a lasting alliance. Since the mid-19th century, their interactions have significantly influenced their domestic development and global impact. Opening of Japan and early interactions. Modern relations began in 1853 with Commodore Perry's mission, ending Japan's isolationist Sakoku policy. The 1854 Convention of Kanagawa opened Japanese ports, establishing diplomatic and trade ties. The US introduced technologies like steamships and modern weaponry, fueling Japan's industrialization during the Meiji Restoration. Japan also drew from Western knowledge to reform its governance and economy. Japan's modernization and rising tensions during the Meiji period. American missionaries and engineers contributed to Japan's educational and industrial development. Japan's modernization and regional ambitions, however, clashed with US interests, particularly in Asia. Agreements like the 1905 Taft-Katsura Agreement sought to manage these tensions by defining spheres of influence. Interwar period and World War II. Japan's territorial expansion in Manchuria and China during the 1930s strained relations, leading to US sanctions. The breakdown in diplomacy culminated in Japan's attack on Pearl Harbor in 1941, bringing the US into World War II. The war ended with Japan's defeat and the atomic bombings of Hiroshima and Nagasaki, which killed over 200,000 people and reshaped global power dynamics. Post-war occupation and rebuilding. From 1945 to 1952, the US led Japan's occupation, implementing reforms that transformed the country politically, socially, and economically. The new constitution promoted democracy and renounced war, while land and industrial reforms reduced economic inequality. By 1952, Japan regained sovereignty through the Treaty of San Francisco, emerging as a peace-oriented state. The US-Japan Security Alliance during the Cold War. The US-Japan Security Treaty of 1951 established Japan as a key ally in countering Soviet influence in Asia. US military bases in Japan allowed the country to focus on economic recovery. This period saw Japan's economic miracles driven by strong exports and US market access. Trade conflicts and economic